Welcome back. The threat of tariffs from the United States remains front and center for Canadian politicians and Canadian investors. Joining us from Toronto to talk about it further is David-Alexandre Brassard, chief economist with CPA Canada, the Chartered Professional Accountants of Canada. David, thanks a lot for joining us. Where do you think this is headed? Donald Trump tossed out the date February the 1st a short time ago. That was in a very informal exchange with journalists. We're not very far away from February the 1st. Where do you think this is going in the short term?
Well, I do hope it's negotiation tactics because as your watchers have heard time and time again, $1.3 trillion crossing the borders in both directions, 3.6 billion per day. And of course, for us, we have more exports than imports, trade surplus significant on goods, but a trade deficit on the service side. I do hope it's negotiation tactics because the U.S. is shooting itself in the foot. About 60% of what we send south of the border is an intermediate input. So in other words, the U.S. creates value with those goods. And if they don't have those goods, or if those goods are more expensive, the kind of value that you can create is a bit lesser. So again, hoping it's negotiation tactic, especially on the energy front, because the rationale behind the tariff, what they mentioned, the border stuff, the drug stuff, it doesn't really apply to pipelines and electrical grids. So again, that's where I'm hoping, but it's really hard to know on which foot to dance with Trump.
Both countries have wrestled with inflation in the post-pandemic period. Canada has wrestled it down to sub 2%. The U.S. is still dealing with higher inflation than the U.S. Fed would like. Do you believe that significant tariffs would be inflationary? There is some debate now on that topic. There are members of the Trump administration who dispute quite vigorously the notion that tariffs in and of themselves would be inflationary, and there's some debate about it here in Canada as well.
So if we go back to economics 101, you put tariffs, someone has to pay for them. So the question is it the businesses? Is it the consumer? It usually depends on the market pricing capacity of the business. If you look at the energy sector, you're talking about big players, big businesses. They're going to transfer that pricing to consumers right away. So that's why I think it might be negotiation on the energy front, because again, if the American see a 25% boost at the pump right after the announcement, that's a big hit on inflation. So to me, it's going to be inflationary because I don't see the businesses taking the hit without transferring most of it, if not all, to the consumers. And again, there's a bit of a misunderstanding because whether it's the company that imports that pays it or the exporter, it will be transferred to the consumers regardless. So again, and for us, the problem is, as you've said, we've managed to control our inflation a bit better because the economy is a bit weaker. But if we do see an inflationary pressure, is that going to slow down the rate at which we cut our policy rate? That's a big risk over there. So again, to restate it, to me, it's inflationary.
And what about in the United States, which of course is the central bank, which is most important to investors? Investors very eager to see the United States dial down interest rates. The current expectation is 2 25 basis point rate cuts this year. Could a spike in inflation knock the Fed off that course?
It definitely could, because if the strength of the U.S. economy keeps hanging on like it has, and as you said, a tariff get applied, transfers to consumer, the Fed will see no particular, if the economy is still strong, as I said, the Fed will not see a reason to cut rates as fast as we expected them to. And on our side, there's a currency risk whenever you have an interest rate spread between Canada and the U.S. This risk has been put in the backseat more recently because of unemployment rising and the economy not performing as we would like it to be. But that currency risk is now a bit higher since the Canadian dollar is not doing so great. So again, that could again, what happens on the Fed side is going to impact the Bank of Canada as well.
Okay, very briefly, what do you expect next week from the Bank of Canada? I assume you expect a 25 basis point rate cut. What do you expect in terms of its commentary, and what kind of answers do you think Fed officials might provide to questions about this tariff situation?
I would like to see a 25 basis point. It's not as much of a slam dunk as it used to be, at least on the Canadian side. This December numbers on the job front were strong. Inflation came in lower, but the GST relief was the main reason for that. But again, is there an urgency to cut rate in order to stimulate the economy? The argument is less strong than it used to be in late 2024. So depending whether central banks decide to err on the cautious side, they might elect to wait. But again, I would prefer a rate cuts.
David-Alexandre, thank you very much. That's David-Alexandre Brassard,